All right, so we're doing a trade day recap for Monday, September 29th on NASDAQ. Now, I want to start off, I guess, by saying I didn't go live on Friday and I didn't go live today because I wanted to pull some of the layers of complications out of my trading. Because it can be hard to be live and you're kind of talking about things, order flow, maybe unrelated and not so much focused on the charts and what the charts are doing. And I'm pretty comfortable live in front of people, so I didn't think it was necessarily anything to probably hinder my trading. But I'm going to remove it for maybe a few more days too, because ultimately, what I ran into is in September, the last 2 weeks, I didn't do very well. So I want to talk about today's trading. I want to talk about what I found out in September. And I think if you're struggling with trading in the last couple of weeks except September, I've noticed some interesting things, and maybe they'll be of assistance to you. So diving in with today. So I had a bullish bias. We tapped into this internal range liquidity, rejected solidly off of this fair value gap. And then Friday had a nice rejection off of Thursday's rejection block, and it failed to close below the range. So I saw that I was expecting expansion into buy side liquidity as the bias for this week and today, and looks like we did see that so far. Monday expanded higher, and this was further backed up on the 1 hour. London session came down into this fair value gap, tapped in there. We had some SMT, and then again at 9:30. We can see 9:30 open on the 15-minute came down into liquidity. I was assuming London was going to be the low for the day, at least at this time, and was expecting a trend continuation. So went into the session overall looking for longs, even though we are in a premium. And move over to this other screen. And here was what I did. I'm not the proudest of my executions here today. Basically, I went long on this this candle here when it closed above these fair value gaps, and then I realized that there was more fair value gaps, or I think right here. I said, well, we closed above it, and so I longed on that candle, realizing we had a complete the inversion would have been here. So I went break even on that, kind of seeing how the 9:30 macro was kind of whipsawing back and forth. I entered again on this candle because this was a sweep and then a close above this order block. I went break even on that one too. I still wasn't liking what I was seeing. And then ended up going in with too many contracts, and so I closed half the contracts at a partial profit just up in here, and then went to break even and got stopped out of break even on that trade. So there was 2 entries, and there's 3 entries because of what I was doing with taking some contracts off. But ultimately, I saw this nice displacement, this closure above this breaker here, and then I went long on this candle targeting 2R, which ended up being a nice W. So I'll take that. And this was surprising for me. And one other thing, this was on demo. And the reason why I did this on demo, and that's in part what I want to talk about here in this trade recap, is I've been seeing some funny things in the price action for me. Now, for some people, they're just killing it. But for my model and the times that I'm in front of the charts, something's been really off. And in my live trading, the last 2 weeks have just been either losses, or I couldn't get in the groove, or my model just didn't present. And so this weekend, I actually went in and back tested all of September in TradeZella, which I love TradeZella both for the data, the statistics, and being able to back test. Because you can pay 30-something bucks a month for just a back testing software, or you can pay the same thing for TradeZella, which then also tracks and journals your live trades and lets you backtest, which for me, like backtesting is one of those things I know that's quite divisive. I don't think a person should be putting so much weight into backtesting at first, because what really shows who you are as a trader is what happens in the live markets. But like in this case, I wanted to understand what happened in September. So I went back and retraded September. And I think that's what backtesting is super useful for. I was curious to see if I would replicate the results that I'm seeing live. And it did end up being pretty close to that, where the first 2 weeks of September, I was green. I traded fine enough. Actually, in September, I was pretty much away for these 2 weeks, but this just carries forward my typical performance from previous months. So that told me that, I'm still understand or it tells me that I'm still on point. Now, when we get into week 3, this is where it got interesting, because this week I struggled a lot in real time. And then here in backtesting, I also struggled. I generally don't have red weeks anymore very often. More like break even might be kind of a red week, or my worst performance. And here I had a red week. And then if you look at week 4 in backtesting, not a single trade. And that was super interesting to me, because I did take some real-time trades this fourth weekend. They were all losses. So what happened, or what's going on? Like, why is it, and this is the question I had this weekend, why can I trade here all prior to this, but the last 2 weeks of September I can't trade? And I kind of mapped it out in a spreadsheet. I know these things aren't exactly easy to understand when there's someone else's chicken scratch, but here's the third week of September. Oops, wrong. I was comparing it to my real-time notes. Let's see here, to get a side-by-side comparison and see the similarities. And what I found was in week 3 in backtesting, I was just off sides no matter what I did. The price action was really poor. There were not clean setups, or there weren't setups. So this, I ended up, once I was able to backtest it and then look at it in hindsight, here was my conclusion as to the themes of the week. I was like, it was just a garbage week for me. And then when I went into week 4, same thing. Like if we look here, it says there was one 930 continuation trade that wasn't clean. One 930 continuation trade not clean, right? That's the theme that you see all over this. 930 seek and destroy. And so the whole last week, I didn't take a trade. I didn't have an actual setup that was aligned with bias that actually worked. There was no setups for me. 930 was continuation or seek and destroy, which I can't trade. I'm a reversal trader. Or I can trade continuations if there's some form of internal stop hunt. But the way price has been delivering the last 2 weeks of September, we're seeing more expansive price action that doesn't lead to retracements. So now that I saw this over the weekend, I saw that for me and how I know how to trade, the market is not conducive to me trading. And so the one thing I have done right in my funded account is I preserved most of my capital. And I'm really proud of that fact, because previously I probably would have done more damage than I would have been happy about in the last couple, and typically in like this time span of 2 weeks, because that's a long time to be patient. That's a long time to take losses. It's a long time to sit on your hands. So with these results going forward, that's why I decided to go into demo today. Now we also have some interesting things this week. If we're looking at the economic calendar, we have non-farm Friday. That means that this week we have Monday, Tuesday, and Wednesday early AM are our highest probability days. But nonetheless, NFP week tends to be a little more dicey. So we want to be in there with lower risk, lower expectations for the market. But nonetheless, I was quite surprised when today provided me, this is what I would call a continuation reversal setup, right? Like the market is trending upwards. And I'm a reversal trader, so I'm looking for a manipulation and an expansion. And so while this wasn't the high or the low of the day, it was an internal session manipulation, a session low, and I was able to ride that up to a session high. And in this case, this is a reversal, a real reversal, where this is probably not only New York session high, but probably the high of the day. And I also trade those kinds of reversals too. But what I haven't been seeing from 9:30 until 11, I trade 9:30 to 12. That's the time window that I'm trading in New York session. I haven't been seeing any of these things like this. A stop hunt inversion and a breaker just haven't been there very, very often. And if they are, you're just offsides. Which I know there's the argument you can trade against the order flow and trade against the bias. And that's true sometimes, because if you look at price action, sometimes you can be offsides and the market's moving equally enough that you can get 1.5 or 2R and you're still offsides. Like today is an example of that, where I was actually offsides for the morning because the delivery was a manipulation up and then a delivery to the sell side. But here I was able to still get in a 2R trade. And this is how price action is more often than not, but it goes into modes and phases where maybe it forms this breaker right here and you can justify bullish price delivery, and it's just like, nope, and just does that. This is how price action has been the last 2 weeks for me in the New York session. And I want to be clear about that, because I've been looking at one of my buddies is doing great and he's trading more so in the London session. And I just time-wise, it's too early for me to get up to trade London session. And London's been providing some super clean trades, like look at how London session is moving even today. You could have longed this and been fine. Could have shorted this swing, could have longed this swing. All these you could have longed, you could have shorted this. You could have done about anything in London and you would have been fine. And this is when price action's good and when everybody can think they can trade. But the last couple weeks, at least for me, they haven't been doing that. And very one-sided delivery. One-sided delivery looks just like, well, my arrow's in the wrong spot, but quite a bit more just like this, right? No chance for, no meaningful retracements. So yeah, I'm not sure what I'm going to do this week. If I'm going to switch back to, I like seeing this cleaner price action, so I don't know if I'm going to switch back to funded, or maybe I'll choose a different funded account maybe than my primary one that I'm working to the payout on. So I haven't decided yet. I'll figure that out today. I'm doing some more in-depth studying, trying to figure out how I can predict this price action that we're currently having. So depending on that, depends on what I'll do tomorrow. I may or may not live stream. Haven't decided that either. So I'm just kind of playing it by ear. And yeah, but I'm still staying in the charts. I'm still trading, even if I'm not live streaming.